And this is how we roll for the second part of the program. Let's bring you very quickly what the markets finished off on the oil and gas Big 7 on Friday, the final trading day in June. Check to the numbers from the stock exchange. As I said earlier at the beginning of the program, it was a bit of a tepid Friday for the Big 7. 40 Oil, one of the biggest most capitalized company within the Big 7, lost about 5%. That's quite a massive volume there at 50.07. Corn oil was unchanged. The heat is out of the corn oil's full-year and first quarter numbers that was reported last week. Mobil at 250.02, MRS sitting at 37.30, and Wando lost 3.5% at 7 naira 30 kobo. Seplat since loss is 470, 465 on Friday, and Total was the only green shoot, 2.90%. Of course, one of the big cap in that space, and that helped the sector about 1.4% gain. In the fourth and the final week in June, wrapping up the month, the first half of the year. So let's move the conversation forward and sticking with the capital market, the broader market. Henry Rowland is the director in charge of market development at the Securities and Exchange Commission, and is live to us from our Abuja studios. There are about 6 million investors in the Nigerian market. 2.2 million of them are already signed on through their banks to get their dividend via electronic means, which means there are no longer physical dividend warrants, but you get your bank account synced with your stockbroking account with a CSCS and your stockbroker, and of course you get your dividend directly credited into your bank account, whether it is savings or deposits or any other or current account or any other accounts you have. So, but the SEC says over the weekend the deadline for that has been extended to December the 31st. So I go to ask questions. Why the extension? Rowland, Henry Rowland, the director in charge of market development at the SEC, is live in our Abuja studios. So that's the first question for you. Good morning, Mr. Rowland. Thanks for coming through. Why was this extension necessary?
Thank you very much, Boson. You will recall that in the month of April 2017, the Securities and Exchange Commission, in response to the yearnings of investors, launched a portal on its website, www.sec.gov.ng, to enable investors go and search as to whether they have mandated for electronic dividends or not. Following the launching of this portal, the SEC discovered that there was a great enthusiasm by Nigerian investors. As a matter of fact, within the last 2 weeks of June, when at the end of which free registration of electronic dividend will have ended, there were a lot of requests by the investing publics. We saw an influx of interested investors willing to mandate for the electronic dividend. And so the SEC was responsive and in its strong focus to ensure that investors' confidence are rebuilt and sustained, and to ensure that the market development is sustained by the SEC. The SEC decided that it will be quite responsive and sensitive to the yearnings of the investors to extend this electronic free registration till December 31st, just to enable all investors keen to this free registration. The additional advantage of that is that we realize that once you are registered for electronic dividends, you don't just get advantage of receiving your dividends in the future electronically, but all your accumulated dividends will be wired to your account directly, the preferred account directly. And so you have double advantage. Now, the singular advantage to the market of your accumulated dividends going to your account directly is that it will further deplete the existing unclaimed dividends. So the SEC thought that it's going to be healthy for the market. It will further deplete all the existing unclaimed dividends, while at the same time servicing the financial benefits to investors. Such is the reason why the SEC thought it was to extend till December.
Of course, we understand. We thank you for providing the background. But again, we understand that there's going to be a very crucial meeting this week between the SEC, NIPS, and other stakeholders on this e-dividend reconciliation and all of that. So what's this meeting all about in particular?
Thank you very much, Boson. The SEC, as part of its efforts to develop this market effectively and ensure that confidence of investors are totally recovered, with a view to ensuring that the market becomes transparent, the market becomes efficient, the SEC has initiated what is known as direct cash settlement regime. A direct cash settlement regime enables the investor to get wired directly to his account any form of sales transaction on his holdings. In other words, before now, if investors want to trade on their stocks, they will go to their stockbroker. When the sales are made, the net proceeds from the sales are returned back to the stockbrokers of the investor, such that the stockbrokers will pass the fund to the investor. And experience have shown in time past that such practices were not too convenient for the investors. And since we have the moral responsibility and regulatory and developmental responsibility to the investor, the SEC came up with the initiative that rather than take this net proceed back to the stockbroker, let it go straight and direct to the owners of investors. And so the direct cash settlements came into being as an initiative. What the SEC intends to do this week with NIPS, with other market participants like the FMAN, like Association of Stockbroking Houses, and the Nigeria Stock Exchange, primarily, is to ensure